Hello, I am Daniel Reeves. Today is Friday, 6th of March, 2026. Gold prices moved higher on Friday, recovering from a decline recorded during the previous trading session. The rebound came as investors turned again towards safe haven assets amid rising uncertainty linked to the expanding conflict in the Middle East. Market participants shifted their attention toward bullion as geopolitical tensions continued to influence global financial markets and investor sentiment. In early trading hours, spot gold climbed by 0.8%, reaching a price of $5,117.27 per ounce as of 0650 Greenwich Mean Time. The gain followed a drop of more than 1% in the previous session. Despite Friday's increase, gold has experienced a notable pullback over the course of the week. Prices have declined by roughly 3% so far this week, placing the metal on track to end a 4-week streak of consecutive gains. The weekly decline reflects changing expectations regarding interest rate policy, as well as concerns related to inflation pressures and rising global energy costs. Meanwhile, U.S. gold futures for April delivery also recorded an increase. Futures prices rose by 1%, reaching $5,126.70. The movement in futures markets mirrored the rebound seen in spot prices, with investors continuing to monitor developments that may affect both monetary policy outlooks and geopolitical stability. If you enjoyed our content, please like, share, comment, and subscribe to our channel. Currency movements also played a role in shaping the market environment. The US dollar weakened during trading, which made gold priced in dollars less expensive for investors using other currencies. A softer dollar typically supports demand for precious metals because it lowers the relative cost for international buyers. As a result, the currency shift contributed to upward pressure on gold prices during the session. Market analysts noted that geopolitical developments remain a key factor influencing investor behavior. Kelvin Wong, a senior market analyst at Owanda, explained that geopolitical risks have not subsided and may even be intensifying. According to Wong, recent remarks by Iran's foreign minister indicated that Iranian forces are prepared for a possible ground invasion by either the United States or Israel. These comments have increased concerns about a potential escalation of the conflict, and those concerns are providing support for gold prices as investors seek assets traditionally considered safer during periods of uncertainty. The broader geopolitical situation continues to evolve as the conflict in the region progresses. On the 6th day of the war, Iran carried out a series of attacks targeting Israel, the United Arab Emirates, and Qatar. The developments represent a widening scope of military activity across the region and have drawn global attention due to their potential implications for regional stability and international security. At the same time, senior U.S. defense officials have addressed the ongoing military situation. U.S. Defense Secretary Pete Hegseth and Admiral Brad Cooper, who commands U.S. forces in the Middle East, stated that the United States currently has sufficient munitions to continue its bombardment operations indefinitely. Their comments highlight the continued involvement of U.S. military forces in the unfolding conflict. The military campaign involving the United States and Israel began on Saturday and has since targeted locations across Iran. According to reports, the campaign has struck multiple sites throughout the country. These actions have prompted retaliatory responses from Iran, contributing to the ongoing cycle of attacks and counterattacks in the region. Against this backdrop of geopolitical developments, gold has continued to attract attention as a traditional safe haven asset. During periods of political instability or economic uncertainty, investors often increase their holdings of gold in an effort to protect their portfolios from volatility in other markets. This pattern has been visible throughout the year so far. Since the beginning of the year, bullion prices have risen by approximately 18%. During that time, gold has repeatedly reached new record highs. The upward trend has been driven by a combination of factors including geopolitical tensions, economic uncertainty, and shifts in global monetary policy expectations. Even with the weekly decline currently underway, the broader performance of gold this year remains strong. Market participants continue to monitor both political developments and economic indicators that may influence the direction of precious metal prices in the coming weeks and months. At the same time, analysts emphasize that price movements in the gold market may remain volatile in the near term. Fluctuations in interest rate expectations, inflation concerns, and energy prices can all influence investor demand for safe haven assets. In addition, geopolitical developments have the potential to trigger rapid changes in market sentiment. As the situation continues to unfold, investors around the world are closely watching both financial indicators and developments in the Middle East. These factors together are shaping trading decisions across commodities, currencies, and equity markets. Gold prices continued to draw close attention from global investors as financial markets reacted to geopolitical tensions and shifting economic expectations. The rebound recorded on Friday followed a decline of more than 1% in the previous trading session, illustrating the volatility that has characterized precious metals trading during the week. While the metal gained ground during the latest session, overall performance for the week remained negative, with gold down by roughly 3% so far. This weekly decline places gold on track to end a 4-week streak of consecutive gains. During those earlier weeks, prices steadily climbed amid a combination of geopolitical concerns and broader economic uncertainty. However, more recent developments in interest rate expectations and inflation concerns have altered the outlook for some investors, contributing to the pullback observed during the current week. Rising global energy prices have also added another layer of complexity to market conditions. Increasing energy costs can contribute to inflation pressures across economies, and these pressures often influence expectations about future monetary policy decisions. Investors closely monitor such signals because they can affect the potential timing and scale of interest rate adjustments by central banks. Expectations surrounding interest rate cuts have been fading in recent trading sessions. When expectations for lower interest rates decline, it can reduce some of the appeal of non-yielding assets such as gold. Gold does not provide interest income, and when interest rates remain higher or are expected to stay elevated for longer periods, some investors may shift funds toward assets that offer yield. This dynamic has been one of the factors contributing to the metal's weekly losses. Despite these pressures, Friday's rebound indicates that geopolitical concerns remain a powerful force supporting demand for bullion. Investors often turn to gold during times of political instability or conflict, because the metal is widely regarded as a store of value. In uncertain conditions, gold can attract increased demand as investors seek protection against market volatility. Currency movements during the session further supported gold prices. The US dollar weakened during trading, and that shift helped lift demand for gold in international markets. Because gold is priced in US dollars, a weaker dollar lowers the cost of the metal for buyers who hold other currencies. This effect can stimulate additional demand and contribute to upward price movement. Market analyst Kelvin Wong of Awanda highlighted the role of geopolitical developments in supporting gold prices. According to Wong, geopolitical risks have not diminished and may continue to grow depending on the direction of the conflict. Wong pointed to a recent interview given by Iran's foreign minister, who stated that Iranian forces are prepared for a potential ground invasion by the United States or Israel. Such statements have raised concerns among market participants that tensions in the region could escalate further. These developments have intensified attention on the unfolding conflict in the Middle East. The situation has evolved rapidly since the beginning of the military campaign earlier in the week. On the 6th day of the war, Iran launched a series of attacks targeting several locations, including Israel, the United Arab Emirates, and Qatar. The attacks represented a broadening of military activity within the region and added to the already heightened sense of uncertainty among investors and policymakers. At the same time, statements from U.S. defense officials have underscored the continuing involvement of American forces in the conflict. U.S. Defense Secretary Pete Hegseth, along with Admiral Brad Cooper, who leads U.S. forces in the Middle East, said that the United States currently has sufficient munitions available to continue its bombardment operations indefinitely. Their remarks reflect the scale and duration of the military engagement that has been underway since the campaign began. The U.S.-Israeli military campaign against Iran started on Saturday and has targeted sites across the country. Reports indicate that strikes have reached multiple areas throughout Iran. These actions have prompted retaliatory responses from Iranian forces, contributing to the ongoing exchange of attacks between the involved parties. The sequence of strikes and retaliatory actions has heightened geopolitical tensions across the region. Financial markets frequently respond to such developments because conflicts can affect global economic stability, energy supply chains, and international trade routes. As a result, geopolitical risk remains an important factor shaping investor behavior across multiple asset classes. As trading continued, analysts and investors also focused on the technical levels that may shape gold's movement in the near term. Kelvin Wong of Awanda said gold prices are likely to remain volatile over the short term. According to Wong, the market is watching a key support level at $5,040 and a resistance level at $5,280. These price points are being closely followed as traders assess whether bullion can extend its rebound or face renewed pressure in the sessions ahead. Wong also said that if gold breaks through the $5,280 resistance level, prices could rise as high as $5,448. His comments reflected the market's current focus on technical thresholds as volatility continues. In periods of heightened uncertainty, traders often monitor such support and resistance levels closely because they can help frame expectations about short-term price direction. In this case, the gold market is balancing geopolitical demand for safe haven assets against economic pressures related to inflation and shifting interest rate expectations. Even with Friday's rebound, the market remains under pressure from the weekly decline already recorded. Gold has lost roughly 3% so far this week, and that decline puts it on course to end its 4-week winning run. This means that while safe haven buying has returned, it has not fully erased the losses that accumulated earlier in the week. The result is a market that continues to move sharply in response to both political headlines and broader financial signals. Alongside activity in futures and spot markets, physical gold demand in Asia also remained an important part of the broader picture. In India, demand for physical gold eased during the week as buyers were discouraged by volatile prices. When prices move sharply or unpredictably, retail demand can weaken because consumers may delay purchases in anticipation of better entry points or greater price stability. That pattern was visible in India, where changing prices reduced buying interest during the week. In China, however, the picture was somewhat different. Premiums held firm there, supported by an increase in investment demand. This indicated that interest from investors in China helped sustain market conditions even as physical demand softened in India. The contrast between the two markets highlighted how price volatility can affect buying behavior differently, depending on local demand patterns and the balance between consumer purchases and investment-driven activity. These developments in India and China are especially important because both countries are major participants in the global gold market. Shifts in demand in either market can influence broader market sentiment, particularly when investors are already reacting to geopolitical tensions and macroeconomic signals. In this case, softer demand in India and steady premiums in China added another layer to an already complex trading environment. The precious metals market also saw a significant development from CME Group. On Thursday, CME reduced the initial margin requirement on its COMEX 100 gold futures contract to 7% from 9%. The exchange also lowered the margin requirement on its COMEX 5000 silver futures contract to 14% from 18%. Margin requirements are an important feature of futures trading because they determine how much capital traders must post to hold positions. Changes in those requirements can affect trading activity, liquidity, and participation in the market. The reduction in margin requirements came as gold and silver markets continued to experience active trading. In an environment of heightened volatility, such adjustments draw close attention from market participants because they can influence how traders manage exposure in futures markets. The move by CME therefore became part of the broader set of factors shaping conditions in precious metals trading during the week. Other precious metals also posted gains during Friday's session. Spot silver rose by 2.4% to $84.12 per ounce. Platinum also moved higher, gaining nearly 1.4% to $250.70. Palladium advanced as well, climbing 2% to $1,662.72 per ounce. These gains showed that strength extended beyond gold, with broader support visible across the precious metals complex during the session. Even so, gold remained the central focus for many investors because of its status as a traditional safe haven asset. The metal has gained about 18% so far this year and has reached a series of record highs during that period. Those gains have reflected persistent geopolitical and economic uncertainty, both of which continue to influence investment decisions in markets around the world. Attention now turns to a major U.S. economic release expected later in the day. Investors are awaiting the U.S. employment report for February. Economic data of this kind is closely watched because it can influence expectations about the direction of U.S. monetary policy. In turn, those expectations can affect the dollar, bond yields, and demand for assets such as gold. With the market already responding to geopolitical developments, the employment report is expected to add another important data point for traders and analysts. For now, the gold market remains driven by a combination of military developments in the Middle East, movements in the US dollar, changing interest rate expectations, inflation concerns, and shifts in physical and investment demand across major global markets. Together, these factors have created a highly active environment for precious metals trading, with price action reflecting both immediate risk sentiment and broader economic signals. If you enjoyed our content, please like, share, comment, and subscribe to our channel. To sum up, gold prices rose on Friday as investors returned to the safe haven metal following a sharp decline in the previous session. The rebound came as uncertainty deepened over the widening conflict in the Middle East, prompting renewed demand for bullion. Spot gold was up 0.8% at $517.27 per ounce as of 0650 GMT, while U.S. gold futures for April delivery rose 1% to $5,126.70. The latest gains followed a fall of more than 1% in the previous session, showing the extent of volatility that has shaped trading in recent days. Even with Friday's recovery, gold has still lost roughly 3% so far this week. That decline means the metal is on course to end a 4-week winning streak. The weekly loss has been linked to fading prospects for interest rate cuts and concerns over inflation as global energy prices have surged. These factors have weighed on market sentiment even as geopolitical developments continued to support demand for gold. The result has been a market pulled in different directions, with safe haven buying offering support while economic concerns have added downward pressure. The weakness in the US dollar also contributed to Friday's move higher in gold. A softer dollar makes bullion priced in greenbacks less expensive for buyers using other currencies. That relationship helped support prices during the session, adding to demand at a time when investors were already focused on growing geopolitical risks. Currency moves therefore became an additional factor behind the rebound, alongside the wider concerns connected to the conflict in the Middle East. Kelvin Wong, senior market analyst at Oanda, said geopolitical risks are still not subsiding and may in fact carry the risk of further escalation. He pointed to a recent interview in which the Iranian foreign minister stated that Iranian forces are ready for a ground invasion by the United States or even Israel. Wong said that this situation is supporting the gold price. He also said gold prices would remain volatile in the near term, with key support at $5,040 and resistance at $5,280. He added that prices could rise as high as $5,448 if the resistance level is broken. The geopolitical backdrop remained central to market activity throughout the session. On the sixth day of the war, Iran launched a series of attacks on Israel, the United Arab Emirates, and Qatar. At the same time, U.S. Defense Secretary Pete Hegseth and Admiral Brad Cooper, who leads U.S. forces in the Middle East, said the United States has enough munitions to continue its bombardment indefinitely. The U.S.-Israeli military campaign against Iran, which began on Saturday, has struck targets across the country and has triggered Iranian retaliation. These developments have increased uncertainty in global markets and reinforced gold's appeal as a traditional safe haven asset. That safe haven role has remained one of the defining features of gold's performance this year. Bullion has risen about 18% so far this year and has posted successive record highs. Those gains have come amid heightened geopolitical and economic uncertainty, which have continued to shape investor behavior across global financial markets. Although gold is on track for a weekly decline, its broader performance since the start of the year remains strong, supported by the same uncertainty that has continued to drive demand during periods of instability. Physical demand trends in Asia presented a mixed picture during the week. In India, demand for physical gold eased as volatile prices discouraged buyers. Rapid swings in price often make consumers more cautious, and that pattern was visible in the Indian market. In China, however, premiums held firm because of a pickup in investment demand. This contrast showed that while volatility reduced buying interest in one major market, it supported investment-related demand in another. Together, those trends added important regional detail to the global picture for bullion demand. There were also developments in futures trading conditions. CME Group said on Thursday that it had reduced the initial margin on its COMEX 100 gold futures to 7% from 9%. It also cut the margin on its COMEX 5000 silver futures to 14% from 18%. These changes came as precious metals. Markets remained highly active and volatile, making exchange policy adjustments an important part of the broader market environment. Other precious metals also moved higher during Friday's session. Spot silver climbed 2.4% to $84.12 per ounce. Spot platinum gained nearly 1.4% to $2,150.70, while palladium rose 2% to $1,662.72. The gains across silver, platinum, and palladium reflected broader strength in the precious metals space during the day's trading, even though gold remained the main focus because of its role as a safe haven asset during geopolitical turmoil. Investors were also looking ahead to the U.S. employment report for February, which was due later in the day. The report was being closely watched as markets continued to react to both geopolitical developments and changing expectations around monetary policy. With concerns over inflation, energy prices, and interest rates already affecting sentiment, the employment data was set to become the next major point of attention for traders. That is the full picture from the markets in this report. Gold rose on Friday as investors responded to mounting uncertainty over a widening Middle East conflict, a weaker dollar, and renewed safe haven demand. At the same time, the metal remained on course for a weekly loss as fading rate cut hopes and inflation concerns continued to weigh on the broader outlook. From bullion to silver, platinum, and palladium, the precious metals market remained active, closely tied to both geopolitical events and economic expectations.